Everything in this video is not intended as financial or investment advice. It's for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. Not too much has changed week over week. Now we tried to fall off the table Bitcoin price-wise. That has since recovered decently over the past few days. But all in all, it's still more of the same. A lot of wait and see in the near term. Now we are still heavily correlated to the Nasdaq, to the S&P. We're still heavily inversely correlated with the VIX, inversely correlated with DXY, inversely correlated with the 10-year. None of that has really changed week over week. But it's definitely something to watch. Just because it hasn't changed doesn't mean it's not worth paying attention to, obviously, because there may be a time when it does change, and that would be a significant event, most likely. We dig into some on-chain stuff here from Glassnode's. Looking at Bitcoin's hash rate over the past month, on a monthly average, we continue to make all-time highs post China exodus, which is what this was here. I don't see too many people talking about this. It's interesting that we're still deploying hash rate kind of regardless of price, right? And even since the bottom of the current local range for price, we've continued to deploy hash rate. So that tells me that either miners are still extremely profitable at these prices, which they are, and or they've paid for hardware that they're only now deploying. You know, there's some lag time on shipping and getting the overhead set up, that sort of thing. So has the rate of change slowed since the China migration? Yes, it has, but we are still making highs here on hash rate. I'm not going to make any leading or lagging prognostications, but it's interesting to think that if you're tied into price on a day-to-day basis, and you see all this volatility versus hash rate, which is just this slow increase, it's just kind of interesting to observe. Transactions per day, on the other hand, 7-day moving average, have started to slide down a little bit, right? I mean, you're going to see this as volatility contracts, which, believe it or not, since the beginning of the year, we are in a period of contracting volatility. You do tend to see less on-chain activity, especially for something like Bitcoin, which has 65% of the circulating supply not moving over the past year. So hodlers are hodling on. They're unperturbed by any of this based on the on-chain metrics. And I'll get to that in a second. But transactions per day here, certainly not leading price, right? And it's certainly not cluing you into a massive decline in price. You never want to see activity for any blockchain falling off the table as price is consolidating. It's just not a good look if you're bullish, right? Because in general, more activity on-chain, more activity in the markets, more volume, higher prices. Just a generality there. Certainly not always the case, but over the years, it's something that has been generally true. Other than transactions per day, we can look at active addresses. Transactions per day are a mixture of things, including multi-output, and Lightning's not in that. You know, it's almost hard to look at transactions per day the same way we ever have, because the network is just fundamentally different. It's almost like looking at Bitcoin versus Ethereum. The networks are fundamentally different, and you have to understand what's going on there behind the scenes. So to try to distill it down to one metric isn't ideal, but it is something to look at for sure. Active addresses, same thing though. Slight lean down, right? In the near term. I would personally feel more bullish in the near term if this was turning up rather than turning down, right? But on-chain activity does not always dictate price, certainly, especially since we've started to approach hodl levels of circulating supply that you don't see on proof of work chains. You see that on proof of stake chains, which is an interesting connection. You know, you see 65% to 70% of the circulating supply being staked on things like Tezos or EOS or most proof of stake chains, not proof of work chains. So that suggests to me that those of us that are here, the hodler mentality is certainly extremely strong, regardless of price, right? Even still, active addresses curling down a little bit. Now here's hodl waves, which is what I'm referring to over and over here. And this is looking at coins that have moved in the past year. And we're all the way down here, sub 40% in the past year. And you can flip this and say, instead of dormancy, you look at activity in the past year, right? So this is activity in the past year. And in general, you see more activity with rising prices, right? Everybody has a price, and eventually, as prices rise, we hit that price, right? As prices go higher, we hit more and more people's price, as in when they get converted from hodler to seller. Each cycle that happens, we've seen it. There's evidence for it on chain, right? Now, there are certainly people who have been hodling since pre-2013, right? Some coins are lost. All this stuff influences hodl waves, but even still, less than 40% of the chain has been active in the past year. And you can connect that and say, okay, that's float, which is amount of available supply for sale. You can also look at that on an exchange basis and say, what is the balance on exchanges over the past year? And that has continued to decline as well. So it tells me not only are hodlers hodling, but you're continuing to see people or entities pull coins off of exchanges. Now, there's a big assumption here that all this data is accurate and correct, which Glassnodes does a great job of. But the caveat here, these are the exchanges, by the way. The caveat here is if the exchanges are partitioning their addresses in some way or moving things around, right, that doesn't always get reported initially. So the assumption here is this is people or entities moving coin off exchanges, which may be incorrect, right? But that's the assumption. So it's important to know that we don't always know where all these addresses belong, right? Initially. So Coinbase might come out and say one day, oh, by the way, this was our vault, right? They've done this in the past with Litecoin when there was an event on Litecoin where you saw these partitioned wallets of 10,000 LTC moving around. Coinbase came out and said, yes, this is us, right? And we can say, okay, we know this is them. And you can use some other chain analysis tools to figure that out. And I'm emphasizing this caveat because you would think that this activity, this decline in BTC on exchanges would be more bullish than it is. You would think. If it matters, which it should, you would think we'd see a price response, let's say. This is assuming demand is the same and supply is reduced. That's what you'd expect, right? So the jury is still out on the usefulness of this in my mind, but it's definitely something worth paying attention to. You can also look at futures funding rate over the past week. And how this works is as we get more bullish, people pay more to be long. As we get bearish, people pay more to be short. And that's what you're seeing here. Sometimes people bet to be long and pay the privilege of doing so, right? And in a rising market, we can support certain levels of funding rates. In a flat market or low volatility market, funding rates don't really go anywhere. And again, this is kind of what you're seeing. And sometimes this does lead price when you see exuberance in the futures market. Here, we're not seeing anything, right? It almost feels like it's a coin flip as far as what futures funding is telling you here. It's just back and forth every other week. I want to touch on Lightning a little bit. Lightning network capacity dropped a little bit, but in general, we're still crazy all-time highs for Lightning network capacity. So this is BTC sitting on a layer 2 network called Lightning, which is useful for bidirectional microtransactions specifically. And it works like a debit card system, so you do need the actual coin on that side of the network. And this settles on BTC. But if you've heard about Strike or El Salvador or Blue Wallet, these all operate on Lightning and allow you to send transactions extremely quickly. We're talking seconds to minutes with extremely low fees, certainly significantly less than Bitcoin or even Ethereum. So for a while there, no one was using the network, relatively, right? We saw very little on-chain evidence that the Lightning Network was even going to take off. But ever since nation-state adoption, Strike, Bitfinex, exchanges are picking up Lightning now, Kraken, Bitstamp. We're starting to see more commerce on the Lightning side than we've ever seen before, and you're seeing that in capacity here, which is why it's a great metric to pay attention to and to look at. Flipping here's the Bitcoin technicals. I think this is the most important chart in crypto right now. So let me break it down. What you're looking at here are Bollinger Bands in the yellow, okay? They are a measure of 2 standard deviations above and below the neutral point, which in this case is the 20-week moving average. And as volatility contracts, the B-bands contract. As it expands, B-bands expand. And again, you can sort of see just immediately, intuitively, we tend to be more bullish when we're above that neutral point, more bearish when we are below. And we tend to push the bands kind of like waves in a beach with a rising tide, right? Or falling tide. We walk those bands up week over week when we're bullish, right? Just as we did in 2017, we did in 2021. Now, not the case, right? That is clearly not what's happening here. We're in a range. We're not trending at all on high time frames. As the B bands contract, there's a bias forming based on price's position relative to that 20 moving average, 20-week moving average in this case. And that's what these colors represent. So we're getting volatility contraction with price below currently the 20 SMA. Anytime historically we've seen this contraction of the Bollinger Bands to this magnitude, to this caliber, they've never been wrong, which is a tall tale indeed, but they have never been wrong. Meaning pre-expansion, pre-volatility expansion, pre-breakout, right? It's tipping you off week over week. Be careful, we're probably bearish here. Be careful, we're probably bearish here, right? The same thing in 2020. Be careful, if you're bearish in this case. Be careful, we're bullish here. It's telling you that over and over and over again. Told you the same thing a couple times in 2016, and arguably it was correct even in 2015 when it flipped multiple times week over week there in that range. And we could certainly be setting ourselves up for a similar accumulation or distribution type of low volatility regime for a year, right? There's no guarantee that anything happens here. It's just telling you currently, if this were to break out tomorrow, the expectation would be bearish. That expectation can change week over week if, kind of like we did in 2015, even in 2016 a little bit, we start to rise above that neutral point, which is currently around 42.7, 42.5, somewhere around there. So that's the key level from this metrics perspective. But I think this is so important because it's happened very, very infrequently. And it's never been wrong, right? I'm not saying it can't be wrong in the future. Certainly not investment advice, but something to pay attention to. And zooming way out even to 2012, we can see, okay, it was right here. It was right in late 2012 a couple times as well. These lines on the bottom are Bollinger Band width, and they help quantify the thickness of the bands or the caliber of the bands. And again, it's telling you this is a historically significant contraction in volatility based on this metric. And it doesn't last much longer than this, right? Now you can measure how many weeks from the current level to the bottom, average it out. But my guess would be no more than 4 weeks in this low volatility environment. So between now and mid-May, we'll know. We'll know if we're above or below that 20 SMA, and we'll know if there's a move being attempted. So definitely something to watch. As volatility contracts, this is always the first thing I look at is Bollinger Bands because, again, it's never been wrong. It happens very, very infrequently, right? Zooming a little bit on the 2019 Pitchfork, my favorite. Not much has changed week over week. We're still in the 2019 Pitchfork. We're still in the 2021 range here. Question is this distribution? Is it accumulation? I don't think there's a tip off either way. We're almost as neutral can be on the Bitcoin side of things as we sit essentially in the 50% area from high to low of the range, right? The ascending triangle possibility still remains, but so does this possibility that we break lows, we test the bottom of this range, right? Ultimately, as long as we are within the 2021 range, within the Pitchfork here, I'm not too concerned about what happens on a day-to-day basis. Once we start breaking down, then I get concerned, right? Then I get concerned in the medium term as far as our ability to maintain neutrality or bullishness, right? Because at that point, we lose both. And we start to set a course for potential bearish continuation. Looking at another high time frame indicator, this is a 2-year MA in the green, the multiplier in the red, the midline in the white. You can see we're still, again, we're lukewarm towards the buy zone, the DCA zone, if you will, historically. But nothing is screaming to me as the trader, putting on my trader hat, there's nothing screaming here, do something on high time frames. Historically, anytime below the 2-year MA has definitely been a bear market or a bear period and has also eventually paid off, right? There's no guarantee that it will in the future, but that's been the process historically. Something else I have on here is the 200-week moving average. In this case, it's the 1400 MA, 200 weeks times 7 makes it daily instead of weekly. And you can see if you want to guess at an absolute bear market bottom historically, again, no guarantees, absolutely, but in 2014, 2015, 2018, 2019, 2020, right, we've hit this level and it's held. So if I was a betting man, personally, I like that level if we start to break down. which in this case I think is around 21, 22K, something like that. In the near term, the ultra near term, I'm still looking at this thing week over week over week thinking, okay, come on, right? Let's make a decision here. We still have descending volume, which isn't great for bullishness. RSI is all over the place, so momentum isn't really going to tell you anything. We're still below the 200-week moving average, below that pivot. We're still in this volume notch, which is telling you supply at 47K, demand at 38K. We're barely within this triangle pattern here. So there's still a potential possibility that this thing actually does break up, right? Just taking its sweet time to mosey through that area, but still a possibility. Then something else to pay attention to adjacent to all this is just the simplicity of the 50 and the 200 moving average. We've been bearish on this since the beginning of the year. And if we do get a bullish cross on the MAs, that could lead to bullish continuation, right? It may be more chop like it was in 2019 and 2020, but at that point we may have a pretty decent shot at sustaining prices above 47K. Definitely something to watch for. Moving on to ETH a little bit here quickly. ETH's hash rate continues to skyrocket. ETH is switching from proof of work to proof of stake probably by the end of the year, based on what the devs have said. So all this hash rate is going to have to go somewhere. It might go to Zilliqa, it might go to ETC. It'll go to any chain that has the same consensus algorithm, which is ethash or ETH hash, however you say that, ETH, ASH. So you may see some interesting spillover on all sorts of chains. You may see some chains get spun up just to try to soak in this hash rate, right? There's a very interesting game theory going on. When the merge happens, right? Because this represents a ton of miners, mostly GPUs at this point, that won't have a home anymore, right? They'll be fully ready to go, fully deployed, electricity probably paid for to some degree, and they're going to move somewhere. So the question is one network going to be the winner, or is it going to be decentralized and split amongst many networks? Something to watch for towards the end of the year. Transactions on ETH also a bit droopy here, making lower lows. Not something I want to see, if I'm bullish in a range, right? It's not the end of the world. This thing can perk up quickly in a matter of hours. But as it sits here over the past year, we're making lows here on transactions. Active address is more of the same. Again, making lows here, bottom of a range. Super hyper volatile though, right? I mean, we can zoom out on this. It doesn't look any better per se if we go to the 30-day, but you always have to be careful when you're looking at, this is why I average it out, because on any given day, you could see crazy spikes in network activity, but what really tends to motivate price one way or the other is sustained momentum on chain. ETH's balance on exchanges also continuing to fall off the table. It'll be interesting to see how this shifts into the proof of stake merge, if it changes at all. It may not change at all. It may increase as more people are aware that this proof of stake stuff has a yield on ETH. I think most people are well informed of that, but maybe not, right? We are almost to the point where we've seen all-time lows of ETH on exchanges. This was post-ICO boom. So this was a bunch of ICO treasuries getting deposited back into exchanges. This was ICOs being bought by retail or whoever, and then this was ICO treasuries depositing back to exchanges. So we've certainly yet to see that rate of change flip on ETH's exchange holdings. ETH futures funding rate also flat. It's not telling you one way or the other as far as bias is concerned from the people trading these instruments. They're not exuberantly bullish here, right? They're not willing to pay funding well beyond any neutral point. There's no bias here whatsoever. It just flips back and forth. Something else interesting to watch is TVL, total value locked in contracts on Ethereum. This is DeFi Llama. And ETH has held up pretty well here in USD terms as far as TVL is concerned. Even despite all the price chop, there's still been this continued robust 133 billion in this case in USD sitting in a variety of contracts, right? So certainly these are incentive based, and there are reasons people deposit money in certain contracts, smart contracts. But the collective vacuum of people leaving this stuff isn't happening. You're seeing TVL just sustain a certain level. On Terra though, on Luna, TVL is almost at an all-time high. So you're starting to see more and more TVL kind of go elsewhere. You can go down the line here. You can say, okay, Avalanche is kind of flat, declining a little bit. Solana, flat, declining. I think Terra is the clear winner recently. Binance Chain, Tron, flat, Polygon, flat, right? So there's this trend of maintaining highs, or in Terra's case, looking like it's ready to lift off. Waves has its own algorithmic stablecoin debacle going on, but Terra's definitely, you can see that in the rate of changes here on daily, weekly, monthly. Definitely been a winner lately in the TVL game. ETH on the technical level, again, not much has changed week over week, kind of just cruising in the same zone. If you want to draw this like an equilibrium triangle, equilateral triangle, we're still above that, right? We're still at the yearly pivot below the 200-day moving average, volume still declining, RSI still a mess. There's no one marker or confluence of markers that I can say, yes, this is bearish or bullish, right? Based on XYZ. There's just nothing here. It's completely neutral from this standpoint. Much like BTC, it's also about 50% of the range. Maybe it's slightly above that since 2021. But in general, not too much happening here price-wise. Now this could all change very quickly, one way or the other. And I think BTC may lead the volatility expansion, and ETH may influence BTC to actually flip from having a bearish bias to a bullish bias. ETH to me looks much more bullish than BTC does, even though they're both pretty neutral in general. And we can look at other stuff. This is the DeFi perp. This is an aggregate of DeFi coins based on market cap. Still struggling to get back into the 2021 range in this case, struggling to get back to this volume area. Not too much going on here, right? Not yet. We're not falling off the table. We're not trending heavily one way or the other. I think we're still in the process of trying to figure out what we're trying to do here. Now, again, Luna's the standout here. It was up 17% yesterday. From a trading perspective, I have trouble looking at this and thinking, man, I really want to jump in here, because this is something that's up thousands of percent or hundreds of percent, right? From pick a day, right? 2021, September, it's still up significantly. And it has yet to have a sustained drawdown or pullback or bear market. You could argue maybe this May through September period, it got challenged a little bit. But undeniably, this thing continues to make all-time highs, higher highs, and higher lows, right? So still looks much different than the rest of the market, much more bullish than the rest of the market, definitely. Sol, again, just to compare and contrast all this stuff together, neutral, flat, watch these 5,200 MAs. It's a very different coin when it's above that 200-day moving average, as are most coins. So it's still trying to figure out what it wants to be in the next few weeks. Definitely something to watch for there. AVAX, again, more of the same, flat, neutral, at the yearly pivot, at the 200-day moving average. And you could even draw a similar ascending triangle setup here that sort of goes out in an agonizing way all the way to July, right? It's potentially may take that long, and it doesn't even measure to some massive upside. Really, it's just an all-time high retest. But collectively, the market still rather calm, perhaps the calm before the storm over the course of the next couple weeks here. That's all I have for this one. Like, dislike, comment, share, subscribe. What'd you like? What I miss? Let me know in the comments below. And happy trading.